Let's go to Denmark. Arne Lohmann Rasmussen, Chief Analyst and Head of Research at Global Risk Management, sitting in the luxury of Copenhagen, one of my favorite cities. Arne, I'm wondering today, again, even if they do a deal, will Israel go along with it is one question. The other question is, will any ship that gets out of the Strait of Hormuz, once if there is a deal of some sort that gives passage for ships to get out of the Strait of Hormuz, will they indeed come back under these sort of what seems like a fairly vague continuation of the status quo, a 60-day extension to a ceasefire with some uncertain passage through the Strait of Hormuz? Once ships get out, do you think they'll come back? Your thoughts of where we're at?
That's actually a very good question, and good morning, everybody. Will they come back when they finally get out after being caught in there for like 90 days? It of course depends on what kind of ceasefire they are achieving. Is it actually safe to go through? How will insurance companies look at the situation? If there's full insurance for a reasonable, not a prohibitive high price, then I think the traffic will normalize. But yes, we saw it with the Bab el Mandab Strait. It took a long time before things normalized, and I think even before the war, for example, our Danish company Maersk, the big container liner, didn't go through the Red Sea, so it takes a long time before things normalize. That's a big fear, I guess, among Western companies, Western shipping companies. Is it safe to go through? But it depends on how it looks like. But I'm afraid it's not a situation they will have to discuss for the foreseeable future. I think this will drag out. I'm a bit surprised that the market continues to buy into this narrative that we have a good solution tomorrow. But we have to accept that they're doing that. But yes, shipping is of course very focused on this, and it will take a long time before things normalize. Sometimes people tend to forget that they actually take 40, 50 days for a VLCC to go from the Persian Gulf to Europe and Asia. It's a big puzzle that you have to put back together. So yes, a lot of companies will be cautious to go through. Some of the smaller ones will of course be happy to earn some extra money, but some of the big ones like Frontline may be a bit more cautious.
And we should really be sending sympathies towards you than me, because I'm here on the beach and there's some people sunbathing behind me and so forth. And then actually you're a lot closer to a red hot war than I am. It seems like the Ukrainians and the Russians are fully at it now. We saw today the Russians announcing a banning on exports of products given the damage that the Ukrainians are doing to their infrastructure there, energy infrastructure clearly on the target list now at both sides. Your expectations for the outlook there? It looks like it's heating up for the summer.
Yeah, it's actually a good question because we haven't talked about Ukraine, Russia for the last 3 months, and there's actually a lot of things going on there. Russian crude oil export is going down. The product ban that they have issues with refinery production now. The Ukrainian real sanctions are working. So this of course tightens the refined product market. Especially in Asia, because there's no export to Europe. But to be honest, the product market has eased a lot. We see jet fuel cracks coming off quite significantly, down more than $50. ICE gas oil cracks down some $30. They're still well above the level before the war, but there's definitely some normalization going on there.
Which seems to be a little bit of counterintuitive, seeing as we're meant to be getting closer to the cliff edge of inventory drawdown. Why these cracks are dropping?
Two reasons. I guess one is that we're buying into a good solution tomorrow, so people sort of delay purchases. But it is also that especially U.S. refineries has been able to ramp up production quite significantly. The export of refined products to Europe and Asia have been remarkable. So it has helped support the inventory. Inventory is still low, but they're actually not falling anymore, both for jet fuel and gasoline. If we look at the situation in Ara, but we are getting closer to the cliff, and I'm afraid these high cracks, the high premiums for refined product, especially distillates, could come back with a vengeance. But for now, the market is relatively calm. Diffs are coming in and so on. But yes, we are living in a world where the snowball effect is still working. It's still rolling, but it's taking a pause. But I'm afraid we also saw the comments from, I think it was Exxon, Chevron, ADNOC, out actually warning that this market is much tighter than people believe. There's a bit of a lean back attitude that this will be solved. Basically, going back to that, we will have a reopening of the strait, and if that happens, I think the discussion will come back. And may I say a final word on the situation in the U.S. and inflation? I really much agree with Malia. I think the important marker for Trump is basically the price of a gallon, because the price of a gallon is a reflection of the cost of living crisis in the US.
Arne, wanted to get your thoughts on where we go from here and get everybody's thoughts sort of the day after. But ultimately, Europe has moved its dependency on Russia to its dependency on a US from a gas supply point of view. We are obviously meant to be in the period which storage gets built for next winter. How do you see that playing out going forward? Does Russia get back in the game? Does it not? Does America? I mean, how does it get played out, do you think?
I think at the moment the situation is actually a bit more severe because at the beginning of the war, Asia really scaled back on import quite significantly. But if we look at the LNG import into especially China, but also other Asian countries, it is picking up again. So we are in a situation where Europe and Asia are basically fighting for scarce LNG resources. So LNG import in Europe is going down at the moment. It's going up in Asia. The refilling is slow of the inventories. We saw the Netherlands out yesterday with a support program to support the refilling. The issue is that the so-called summer-winter spread is working against refilling because it's very expensive to buy LNG spot or gas spot, and when you have to hedge it for the winter, you will hedge at a lower price. You actually automatically incur a loss when you fill up inventories. So the Dutch are going out saying we will support refilling, paying this discount or this cost of hedging. I think Italy, France have done something similar. Germany have said that the market should take care of it. I'm quite concerned about the refilling pace is going too slow, especially if we also get a tough El Nino. There's a lot of focus on that in Asia, that the autumn could be pretty hot. So air conditioning is picking up. Russian LNG is still coming in, will be phased out January 1st. And then in September next year will be pipeline gas. I think there will be a political pressure from some southern countries. Italy is very dependent on gas to sort of extend Russian LNG import. Will it be changed? I doubt it. If we're going to have some easing for European companies, it will come through the EU ETS, in my view, which is the carbon cost of using fossil fuel, which is quite a significant cost for especially power producers, but also the industrial sector. But inventories at the current level still some 7-8 percentage point below the level last year, and still below the level of the catastrophe year of 2022 is a concern seen from a European perspective. And this competition, basically prices are too low in Europe today to compete with Asia. Asia is bidding up prices as we speak.